You're entering CNBC TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
You're with us here on a fresh new edition of Trading Hour. Wednesday morning, the market is down about 50 points. Nothing to complain really, given the strength of the rally we've had for many days now. Global cues came back after a day of holiday for US markets on Monday. But did they tell us anything up or down? Not really. US markets were as flat as they come. The US dollar, rates in the US, not very much at all. The second half is what is going to be data heavy in terms of global cues. We'll get many important data points, like, for example, the jobs report. Then we'll hear from the Fed chair on Friday. So, essentially, it's going to be the next 2 days which decide the course from a global perspective. Here, we've had this hugely strong move. So a little bit of consolidation, perhaps, in store for us. With me over the next 60 minutes, my colleague Rima Tendulkar. Hi, Rima.
Hi, Prashant. Absolutely. It's a close to 9% up move that the markets have seen since that breakout with levels of about 14,600, 14,700. We broke out at those levels and it was a one-way 900,000 point up move. And for the last two trading sessions, markets have been consolidating. But even as the indices are moving sideways, losing a little bit, the mid-caps are going strong. So the mid-caps are actually outperforming after 3 days of underperformance. And the Midcap Index is currently higher by close to about a percent, with an advanced decline ratio firmly in favor of the gaining side. In fact, let's talk about some of those big movers today, and one of them is Gujrat Gas. This is post their superb set of Q4 numbers. Our colleague Sonal is here with more details on that. Sonal.
Thank you so much for that. Well, for Gujrat Gas, the numbers were much better than estimates. There was an expectation that we will see a margin contraction, and yes, that did happen, but it is much lower than what the street was working with. So overall, revenues came in at 3429 crore rupees, which compares with a poll of 3667 crores. EBITDA did decline by 6%, but the decline is much lower at 554 crore rupees. Profits also down 11% on a sequential basis. That came to 350 crore rupees versus an estimate of 288 crore rupees. In this quarter itself, the company achieved highest ever quarterly volumes of CNG at 1.7 MMSCMD. The total volumes, they went up by 22% on a YY basis, 6% on a sequential basis, and the margin contraction came in only because spot LNG prices were at record high in the quarter gone by. The company says that now, after the second wave, average volumes till date in quarter one stand at 10 MMSCMD, and in the month of May itself, it averaged around 9 MMSCMD, which is not much lower than what we saw in quarter one. Additionally, the company gave an update on the PNGRB approval that came a while back, where they allowed transfers of two geographical areas, that is in Bathinda and Amritsar, from GSPL to Gujrat Gas. And Bathinda is one of the major areas for industrial gas usage. So Motilal Oswal says that it will add to volumes for Gujrat Gas, and that's why they've revised their FY23 volumes to 14.6 versus 13.8 earlier, because this would be a big geography for the company. They have raised their estimates by 15 to 10% for next 2 years, and they say it's the fifth consecutive quarter of an EPS upgrade for Gujrat Gas. CLSA has downgraded the stock, that is basically on the back of valuations. However, they have raised the target price to 570, and I was going through the past performance. So in last 8 quarters, the company has actually outperformed and beaten analyst estimates as far as margin and volumes are concerned. So that's why the outperformance that we are seeing in the stock price today as well.
Sonal, thanks very much for that. That's Gujrat Gas, doing very well. If you look at the Nifty, Adani Ports is seeing a bit of price action. It's kind of consolidated. Yesterday, by the way, had a decent day because Adani Enterprises saw a very large move. Adani Ports, I think, on the back of it did well. And it's up about 2%, a little under 2.25% right now as well. The high was 852. Which was not actually 852, the high was 885 on the 7th of April. And now for the last, 20-25 days, it's been consolidating, but we're at about 816 right now. What's up with Adani Ports specifically? Agam is here to tell us more. Agam.
Well, we've had volumes for the month of May from Adani Ports, JNPT, as well as Pipavav Ports. And it does seem, and what is evident, that Adani Ports as a group as a whole has gained market share in the month of May. And this is evident in the volumes because when you consider Adani Ports container volumes, they're up as much as 4% month on month. And of course, year on year, there has been a significant up move because of a low base. But of this, where about 77% of the volumes come from Mundra. Of course, we know that Adani has a controlling stake in Mundra, and that is also seen an up move on a month-on-month basis. In comparison, if you consider Pipavav Ports, the volumes are down by as much as 44% month-on-month and 42% year-on-year. But this is because the last 2 weeks of May were impacted because of Cyclone Tauktae. And in comparison, you also keep JNPT, where the volumes have declined 3% on month-on-month basis. So that does give Adani Ports an edge because that has seen a growth on a month-on-month as well as a year-on-year basis. And that's also the reason why we're looking at strength in our stocks.
Okay, 2.5%, 818. Agam, thanks very much for that. Let's move on to Tech Mahindra in particular. The stock's down about, 2.33% or so. It's had a steady move, from the lows of about 950 to the recent high, which was about 1,032, but back at about 1,000 rupees now. There's a downgrade from Goldman Sachs. Rima, tell us more.
Absolutely. So Goldman Sachs has downgraded Tech Mahindra to a neutral rating. They brought the target price to 984. The two key reasons are that the company is lagging behind its Indian peers on strengthening their relation with cloud and SaaS technology players, which will hurt its organic revenue potential. And secondly, on 5G, they're saying that, 5G revenues still remain a distant dream or a distant hope because as of now, there is lack of visibility on the timing as well as the quantum of benefit. So those are the two key reasons. And because of that, they've lowered their revenue expectations from Tech Mahindra for FY22, FY23 as well as FY24. So earlier they were expecting about a 10 to 12% growth. Now they're expecting a high single digit, a 9.5% growth over the next 3 years. And consequently, EPS estimates have also been brought down quite significantly. In fact, 3 years hence for FY24, EPS estimates have been brought down by nearly 14%. Back to you.
Rima, thanks very much for that. So there is a little bit of pullback which we are seeing in Tech Mahindra. Look at Infosys, which is down about 1.25%. Emphasis, which is down. And I think you can sort of look at the Nifty IT index itself, which, by the way, is a top loser right now, about 1.25% cut on the Nifty IT index at this point in time. It's basically leading this down move as far as the broader markets go. Mahindra and Mahindra is in focus after the company presented a conservative guidance for the tractor business. In this regard, we spoke earlier in the day with Hemant Sikka, the president of the farm equipment sector at M&M, and he sees green shoots visible. He remains optimistic on business picking up in June. Listen in.
Way it was going up, I think it is going down at the same pace, which is a very good news for us. And we are seeing that play out in last about 8 to 10 days. Very early trends, but actually most of the players, including Mahindra and Swaraj, both brands for us, actually had a very good close to the month of May. People have money. As they are seeing that the COVID wave is going down, vaccination is kind of progressing, catching pace, most likely in the month of June, the confidence with the farmers is coming back. And now they are going ahead and buying the purchase that they wanted to do. Regarding the industry, overall, industry has given a guidance, including us, that we are looking at a low single-digit growth for this year. Overall, at an average, about 60% of our dealerships were closed. And even in the dealerships that were open, in the 2 weeks of April and 2 weeks of May, for these 4 weeks, the walk-ins had almost gone down to a trickle. No, inventory is very, very comfortable. In fact, to be honest, I would have preferred a little bit more inventory with me at this stage going into a season. The inventory position is better than what it was in the beginning of June last year, because last year was 6-week total lockdown, not even a single tractor could roll out in the plant. This time we have been able to run our plants at around 60% of our capacity, even during the lockdown. So we lost about 30-40% of the production because of supply chain issues. Because as you know, Bangalore is currently under severe lockdown, and some of the key suppliers are coming out of Bangalore. You know, Bosch is there. There are some other very, very important suppliers from there.
That's some corporate opinion for you. We'll slip into a very short break on that note. On the other side, we'll talk about what's happening in the commodities world. Stay tuned.